Well, economists have expressed relief that consumer inflation, or the CPI, slowed to 5.5% last month. The data released yesterday shows CPI is lower than economists had forecast. The Reserve Bank warning that inflation could breach its target of 3 to 6% this year, saying higher fuel and wage increases are risks to the cost of living. It's true as well. Let's find out just how happy economists are with this. Financial markets guru, analyst CRUICKSHANKS with me, and always a pleasure talking to you as well.
Thank you,
I know Lenny normally chats to you about the CPI, but I want to try and get a sense of is this really good news for the South African consumer, and can we expect more rate cuts in the future?
The answer to your second question, no. Very unlikely. More rate cuts? No, we haven't had any for a long time, and in an environment where inflation may be down just for 2 months in a row, maybe less than had been expected, but the trend is still up. You mentioned a good way of putting it. It's not just inflation, it's the cost of living. We don't have incomes keeping pace with the rises in electricity and food and the basics that we see, and fuel. You know what is very interesting, we saw the official CPI at, where was it, at 5.5%. Yeah. That's all items put in. Now, if you take core inflation, that takes out food and fuel. You can't live without those, but if you take that out, then it comes down to 5.1. So doesn't it show that the basics, as well as electricity, are what are driving inflation higher? Is that going to change? I think that's unlikely.
So enjoy the Christmas present now from Jill Marcus and the banks while we can. Explain to me, if you can, demand-driven inflation versus inflation from a weaker rand. Which is the more prevalent to how consumers watching this right now need to be aware of?
We have a very weak currency. We have a high emphasis on imported goods in South Africa. Just think of oil. Just think of so much of what we buy. Anything that's transported has to pay a higher transport price. And that's another point. When petrol goes up, and it's likely to go up another 30-odd cents next week for the following month, and what happens then is the price of bread and milk and meat and everything else goes up, because they say there's a transport component in it. So we've got higher cost of living, to use your phrase. And but when the petrol price comes down, you don't get cuts in the bread price. We have an emphasis on upside only.
This puts the Reserve Bank governor in a bit of a sticky wicket, though, doesn't it? Because on one hand, they've got to try and manage the inflation as well. That's on the upper end of the 3 to 6% bracket, that they're trying to stay away from that 6%. But on the other hand, they're trying to stimulate and keep the economy growing. And they can't, of course, do that with the way the trend is going, as you suggested.
It's a fine balancing level that we have at the moment. And I think at the moment with the rand being, as the governor herself said some time ago, the greatest threat to inflation is the rand exchange rate. Take that from whence it comes. And if the rand, you may say, well, it was at 10 Rand 50 and now it's at 9 Rand 70. That's much better. Yeah, but hey, at the beginning of last year it was at 8 Rand 50. So, over the period, the trend is weakening.
I'm going to ask you to pull out your crystal ball for a moment. The expectancy was 5.8%.
Yes.
Month before yesterday was 5.6. Yesterday 5.5. What's your number for next month?
I would say probably around about 5.8, with the risk being to the higher side. Remember that the Reserve Bank has already said their forecast for the third quarter, that is July through to September, is at an average of 6.3%. So they see it going over that, probably to around 6.5%, before coming back again towards the end of the year. And then the rand effect will start to play in over the next 12 months.
Ever closer to that 6% bracket they're trying to keep us below.
Yes.
Ian, always a pleasure talking to you as well. Looking into that crystal ball, we'll drag you back in again, I'm sure, when that happens. CRUICKSHANKS, financial market analyst, joining us on eNCA.
News that moves. eNCA.com.